Good morning, traders. Good morning, fellow traders from whichever part of the world that you are joining this episode of the Daily Morning Market Call. My name is Kefa Eric, your market analyst and one of the market analysts here at HFM Markets, your financial partner and financial broker. Now, this is going to be a pre-recorded YouTube video. Kindly visit the HFM YouTube channel at HFM Kenya, like, subscribe, and click on the notification button so that you're not left out in future videos. And I will give a 5-second moment of silence so that you could do that, like literally. Click on the notification button, subscribe, and like. I'm waiting. Thank you. Now, moving on swiftly, we begin from an economic data point of view. What has been happening? What has been happening? Yesterday, we had a number of economic data coming out. We had Australian Westpac consumer confidence coming out. Consumer confidence change for the month of November. It came out positive, higher than what was expected, strengthening the Australian dollar a little bit. Then we had the NAB business confidence for the month of October. Came out higher than expected at 5, which strengthened the AUD a little bit. And if you go to the AUD chart, you'll be able to see a little bit of retracement to the upside, suggesting an AUD strength. That is AUD for AUD pairs with a and for the Great British Pound, we had the employment rate coming out. Unemployment rate came lower than expected, which is good, showing a resilient labor market. For employment change, it came higher than expected, which strengthened the Great British Pound a little bit. This is reflected on the charts to suggest a little bit of strength for this currency in context. Now, in Eurozone from Germany, we had the economic sentiment index for November. Now, the economic sentiment index is sentiment or conversations from economic pundits on their view on the growth of the economy, and this particular context is Germany. And as we know, the euro is a currency for 20 countries in the Eurozone, but we tend to look at the big 3 right now. They were big 4 before British exited on the Brexit. Now we are remaining with France, Germany, and Italy. And so we take this news a little bit much more seriously because it is from the big 3, with Germany enjoys a seat on that table. Now it came out negative at 7.4, which is about negative 5.6 from what was expected at 13, and from the previous 13.1, which weakened the euro drastically. If you go to the euro pair that we are going to be demonstrating, you'll see it is moving on the downside. Now, today we are expecting the epitome of these weeks. Today and tomorrow, as we move, we are going now to a much more significant higher impact news, which is going to affect short and medium time movement of price. And this is the CPI, the Consumer Price Index, which is coming up today at 16:30 East African time. And as we approach the release of the latest CPI data, all eyes are on the inflation trends and their potential impact on global markets. Inflation figures are a key indicator for the Feds, it's important to note, as they determine interest rate decision and economic policy. A higher than expected CPI could signal persistent inflation pressures, potentially leading to more aggressive rate hikes from central banks, something that could support a stronger currency but weigh on growth. So in short, if CPI comes on stronger, which is higher than 2.4 previous, or higher than 2.6, which is the anticipated. We expect a stronger US dollar. That would mean for US dollar quote currencies, we'll see it keep being bearish, and for US dollar based currencies, we'll see it being bullish. On the flip side, a softer CPI data coming out would suggest a weakening US dollar, and we would see for US dollar based currencies moving down or bearish, and for US dollar quote currencies, we'll see it being bullish. With inflation continuing to be a major global concern, the CPI release could be a game changer for a short-term market direction, particularly for the financial markets, bonds, and equities. Now, this is quite important to note. So as to anticipate this data, knowing very well the implication it has on the financial markets. Now, moving on swiftly, let's go to the charts and see how we could leverage on this. Nice. So beginning with our usual suspect, the Euro USD. This is on the daily time frame. We can see it is on a sharp trajectory to the downside. It's dovish, supporting the fundamental narrative of the strength of the US dollar, which is going to indicate that for US dollar quote currencies, it's going to be bearish. For US dollar based currencies, we will see a much more bullish scenario, suggesting the presence of more sellers in the market in the context of US dollar quote currencies. Now, remember, guys, we have been calling it out from up here. So I hope you take these daily morning market calls quite seriously. Like, subscribe on the HFM YouTube channel at HFM Kenya, so that you are not left out. And if you are left out, then no need to worry. Just like and subscribe, and that is going to be sorted out. For GBP USD, we see it also moving in a similar fashion. We called it out from the break of this higher time frame trend line, movement of price to the downside, suggesting which supports the narrative of the strength of the US dollar. Would like to see it come and hit this particular key level here at 1.2664 and break below to keep selling to the upside. Remember, guys, this is in context to upcoming economic data releases, so it must be understood in context. For AUD USD, we see it moving in a similar fashion. What a good time to be a retail trader and an investor, because we like to see fundamental analysis in line with technical analysis. Now, like we have suggested, we see price moving to the downside, and we would like to see it come and close below this level that it is creating here at 0.6153 for it to indicate more prices movement to the downside. As it stands, we know the US dollar is quite strong, and that is why if we look at Euro USD, GBP USD, and the AUD USD, we see they are losing. At Euro USD, it's at negative 0.13. Suggesting a bearish trend. For GBP USD, it is at 0.09, suggesting a bearish trend. For AUD USD, we see it at 0.16%, suggesting a bearish movement of price. Now, moving on swiftly to US dollar based currencies, to US dollar coming in fast. We see prices moving to the upside. Would like to see it come and close above the key level we spoke about, or trend to that position in a bullish manner at 0.8727 for it to suggest further further movement of price to the upside. Remember, guys, as we anticipate CPI, we will monitor with the release of CPI. Will the dollar keep on strengthening, or will the dollar keep on weakening, or will it remain steady? Tell me what you think on the comment section here at HFM Kenya YouTube channel, so that we are able to grow as a unit and we make sure no one is left behind. For USD JPY, we see it moving in a similar fashion. Would like to see it come and close above key levels. and right now we see it's trading even much more higher. If this trend continues, it would hit to the high it had created sometime around last month, but one to suggest a bullish trend at 1.6813, which is up here. So in short, would like to see price keep printing to the upside to hit that particular key level, which is the resistance, to suggest supporting the narrative of the strength of the US dollar in comparison to the Japanese yen. For USD CAD, we see it also trend in a similar fashion. Price is printing to the upside. Right now, we see it is at a key level, which could mean a key level here, where price bounced off. Would like to see it close above, and when it closes above, it would be a good opportunity to keep going bullish on it or long at 1.3795. For GJ, let's take a look at what is happening from a lower time frame. We see GJ is kind of moving to the downside, but the all-time narrative is a bullish trend until this particular high over here, and this particular high over here takes out this low. We will keep on being in a bullish trend for GJ, and would like to, for safer trades, would like to see where price is come and print above, print above a recent high, which is at 198.443, to suggest price movement even much more bullish. Moving on swiftly for gold, precious metal. Gold from the 4-hour time frame, begin from the daily time frame, we see in a sharp correction, and price closed below the 2.60465, like we had suggested yesterday, indicating the power of the US dollar right now in correlation to the to gold. And we've moved to lower time frame. We see a little bit of consolidation right here. Would like to see price come and print below the recent low it had created here at 2592.65 or thereabouts, 53, 29, 25, 89.53, for it to keep suggesting price of movement to the downside. And if you go even to a much more lower time frame, it would be indicated, it would be a very good place to keep looking for trades in the direction of the current market trends. Remember, guys, by any chance, this is not financial advice. This is purely for information purposes. So do your due diligence, and remember to trade with proper risk management. And if we have been able to tell the narrative of the market for this long, for those who have been watching this every day ever since we started afresh a couple of weeks ago, you could see the benefit it has on your trades. And I encourage you to keep doing it. Please visit the HFM YouTube channel, like, subscribe, and click on the notification button. Tell a friend to tell a friend so that no one is left behind. My name is Kefa Eric, your market analyst here at HFM, one of the market analysts here at HFM. HFM, your number one forex broker, financial partner, offering a variety of financial products with favorable trading spaces and products, which would give you a good experience as you get to learn about the financial market. See you tomorrow, the same place, the same time, to do things the same way that has proven positive consistency. Until then, take care. See you on the other side of profitability. Thank you.